All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. This will be more of a trader talk as I do have another guest for you today. Another someone that's always in demand. People always ask me to bring him on, just like Willie Woo yesterday. Today, we will have Phil on the show. Today's Tuesday, October 20th, just to get the date out there. Say hi, Phil.
Hi, Tone. Hi, everyone.
Hey guys, we are going to jump right into the charts. I'm going to take no more than 10 minutes, hopefully less, just to give you my take on the markets. And then the floor will be Phil's. And then maybe I'll come in at the end and give you guys one more look at what I think about the markets. We are going right into the weekly chart. And this is a beautiful looking candle. Hey, Phil, I believe the last time we did a show together, we were right here in August, pushing up actually at the same exact price we are now, which is kind of ironic, right?
Yeah. I've actually looked at I've looked at the last two shows I've been on with you, and most of the time, or both of the times, actually, we've been just at resistance, about to try and break out, and then we've dumped afterwards. So I'm hoping I'm hoping that's not a bad omen this time.
Oh yeah, no, so speaking of that, I don't think that this time. So the last time Phil and I did a show, we were sitting right here around August, approximately 12,000. And I think we were like breaking 12,000 while we were on the show, if my memory serves me right, but it was around there. And we were both a little bit concerned. We were both optimistic. We were both like midterm bullish, but we were a little bit cautious on the short-term side of it. We are now sitting at the same exact price, but this is a significantly stronger position. At least in my eyes, it's stronger. We'll get Phil's take in about 5 minutes. I think this is incredible. We are on the verge of having like the third highest weekly close ever, or like the seventh highest weekly close ever, and the second highest monthly close ever if we close above 12K this month. And we're in a much better position now than we were back in August for a breakout to challenge that $14,000 high. The MRI index gave me this green star, which means that that is where I have potential trend to the upside to reach that MRI top. Now, the same thing happened here that almost marked the top, but you guys got to keep in mind that if you understand this indicator, the green star doesn't show up at the end of the candle. It actually shows up when we break this, blue line all the way down here at just above 10K. And this time around, it showed up at just under 11K. And we're still in a very positive move. That's the weekly scale of things. Just a glance at the oscillators, they are all pretty damn positive, including the MACD. The MACD makes me pretty damn, oops, didn't mean to do that. MACD makes me bullish right there. The CMF is bullish. And the RSI is also bullish. So everything is pretty much bullish. Here's the daily chart. We talked a lot about this yesterday. Now, the weekly and the monthly are still both bullish. The daily chart also went bullish on Monday. This is just a complete, like the times are lining up. The daily and the weekly have lined up for a breakout, which was absolutely perfect on Monday. And people asked, are we gonna, what's the probability of breaking this resistance line? They're pretty damn high to me. I don't really see how this current upswing is any different than the upswing we had in early October. And that drove us, about over 1,000 points up. I can certainly see us going to 12.5 for this double top, little tiny pullback, and then more upside. So I am bullish daily chart as well. A quick look at the BitMax funding rate. It is basically neutral, but BitMax is definitely losing a lot of volume. Not going to talk about the Arun much. The oscillators, the MACD is bullish. Everything is bullish. Not going to look at the ADX right now. CMF is bullish as well. And on a very short time frame, this is a new 4-hour high close, and we have 2.5 hours to go. So this is everything is very bullish looking development. We'll take a look at the traditional markets after. I do want to hand it off to Phil at this point. So I'm going to stop my screen share and give him a shot at it.
Right.
People are asking, what's the MRI? Oh, so what is the RSI? Oh God, no, you should know what the RSI is.
All right, can you see my screen?
I do.
Right. Firstly, I'm absolutely terrified that I'm gonna be doing some sort of bullish continuation here, because the theme of what I've got to say is that in the summary is going to be that things look obviously extremely bullish. So I just wanted to start off by sort of setting the scene as to how I see it at the moment. And effectively, I shared something on Twitter like this yesterday. We retraced the full bear market now 50%, and it's provided resistance through 2019. And then obviously, it took a while to get across it. And we did briefly breach it, a few weeks back, or a couple of months or whatever it is now. Since then, obviously, we tried to retest it, came back against the significant breakout at 10K. And then we've continued to try and retest the 50% fib. This 50% fib's like really important because it's also the highest weekly closes of the previous year. And also the year before that, it was the bounce from which the bull trap came right at the end of the previous cycle. So we know that there's a lot of attempts now to try and get across this 50% fib, which is great. Now the interesting thing is, if we go back to the previous cycle, the exact same situation was playing out, and this is the same week actually as it was 4 years ago. We had the same bull trap against the 50% fib, and then we traded below that for effectively the full bear market, after which we eventually broke it around the time of the halving. We came back, retested this big consolidation breakout, and then this point 4 years ago, we were post-halving in exactly the same position, retrying the 50% fib, which is, it's incredible how similar, the cycles are. We talk about it, it's almost like it's a bit of a meme, in the space, but the reality is that there is cyclical stuff going on here. I'm going to go and sort of show that this isn't just like a chart meme. All of the data backs it up, that we are where we are sort of this time 4 years ago. So just before I go on, and I will just put it here just for a laugh, the point from this 50% was in just over a year, or about 18 months or so, Bitcoin proceeded to do a 30x in the market, which was, it would have been insane. I'm sure you would have agreed, Tone, back at $600 or so in 2016, that by the end of the following year to be at 20K would have just been sort of mind blowing. And just
and in fact, sorry, I know I'm interrupting, but in fact, that December or like late December, I was interviewed for Bitcoinist about my future outlook and price. And I said that I was looking for a Bitcoin to have an amazing 2017 and to rise from 700, the area you're talking about, to $3,000. So that was my outlook for 2017. Going into 2017 was a rise to 3,000. And at the time, people thought that was a little bit too much. I eventually raised that target, and I thought that going above 7,500 in 2017 was dangerous, and we saw how fast we came down from that 20. But up to 7.5, I felt that it was still sustainable and orderly.
Yeah, I'd agree. And I mean, 3K, well, that fundamentally became our previous the bottom of the bull market, actually, strangely enough. But yeah, I mean, straight after, things just shot up, and just I don't think necessarily this is going to happen, but the sort of 20x off the top, so this $338,000. I mean, imagine, in this time next year, that's actually what we went through in 2017, was that size of a run from where you are now.
I do, however, I do think that another 30x is not reasonable.
Oh, I totally agree.
But mostly because, like, as with each, increase, with each, 10x rise in Bitcoin historically, it's so much harder to move it another 10x. So I think if we can get even a 10x move, I think that's incredibly impressive.
Sure. I mean, if I was to guess, I would sort of say that your expectation should be like half what it was the previous cycle. Just,
Right.
if you're going to be
Right, like
conservative.
33% to 50%.
Yeah.
So I'm expecting 10 on the next cycle. I'll be happy with 15.
Exactly. I mean, if you just think of the liquidity required to prop up a market where Bitcoin's at 300K, the exchanges at the minute they'd barely be able to take more than sort of 100 Bitcoins sold over the day. Net, it would just, the whole thing would fall to bits. So yeah, there's a massive requirement for liquidity to really be able to get up to those sorts of prices. Very unlikely, but just for the purpose of illustration, that's what we went through within a year, and it was just crazy. So I just thought it might be nice to just put that out there, just to give a little bit of bull.
People are asking like my statement of 10x from where? 10x from here. So Fib and I are both looking at the same exact area. This is like, mid 2016-ish. So for the next year and a half to 2.5 years, I think a 10x is reasonable.
Yeah, I tend to agree with that. So, yeah, we'll have to see what happens. But the purpose of sort of sharing this really was just to set the scene as to sort of where I think we are in the cycle. So, obviously, what happens after that? I mean, the narrative is, we had the halving, supply inflation decreased by half, miners don't make as much money as they have done in the past, disincentivized to sell. You've come so far through the cycle that there's not really anybody who's in a loss position in Bitcoin, so why would you sell? And then that just gains like this momentum, which leads to a parabolic move up to the upside. So that's kind of what we've seen in the past. So that was the narrative previously. So this is the 1 year hodl wave chart. And what this shows us is the percentage or the proportion of the Bitcoins that are out there that haven't moved for 1 year. And if you look in the previous cycle, you get this accumulation period, which comes out of the bear market, at the bottom of the bear market. And then that really holds while new Bitcoin's obviously being produced over the period, and it goes sideways. In the previous cycle, we'd be somewhere, around here, on a like-for-like basis, where about 60% of the coins were kind of not moved for 1 year, and you might like to say invested into the bull market. And then following that, you got this distribution as Bitcoin went up to all-time highs. So today, obviously last time, we also saw this accumulation it actually happened really starting at 6K. And we sold off a little bit earlier after the plus token scam. But then since, we're actually at a higher point of the total proportion of coins that are being held, presumably for investment as like for the future of this bull market. So this looks extremely bullish. It's exactly the same as it looked last time. It implies that investors who are taking part in the market are in it for the long cyclical run. So it gives us a good bit of evidence that, if people are holding on for the cycle, why would they dump it now? I mean, one of the other things here is Bitcoin's profitable days. Bitcoin has effectively, the only people who haven't been profitable are these guys at the very short amount of time, December, January of 2017, 18. And then just very, very briefly at the top back in July, June 19. So who's really incentivized to sell these Bitcoins that they've currently got at the moment when everyone's in profit? Doesn't really make sense for you to have any incentive to sell them when effectively everybody who's above them, all of that supply that might be there to get out of a bad position or what have you, that's already all gone. So you get to the point where there's really no natural sell volume in the market. And I think we're probably getting there. That's what the hodl waves would suggest. I am moving between charts here, Tone. So was there any questions on either of those?
No, we're good.
No. Okay, so this is the balance of Bitcoins on exchanges. So you can see in the previous cycle, this gradually climbed all the way through. And then pretty much where we are, again, just around the halving, the number of coins on exchanges decreased there. So the same is also happening here. Now, the reason presumably would be that it's to do with the number of coins being accumulated to be held for more than 1 year. So this is telling us that effectively there's nobody moving coins to exchanges to sell. They're moving off the exchanges. I know there's a little bit of a debate about how this is impacted by the decentralized exchanges and stuff like that. But to me, there's too much of a divergence there to suggest anything other than this is impacting price, because obviously, there's a clear divergence. It couldn't look any more perfect than that at the moment. So we know that the coins are coming off the exchanges. We know that people are holding them for longer. We know that everyone's in profit. The Puel multiple, what this does is this tells us effectively how much money the miners are making relative to what they've made it in the previous year, or how much money they've made for that. Now, you have to bear in mind, obviously, I know you know this, but we used to make 1,800 Bitcoins a day. We now make 900. So the miners today are making about 10.8 million per day, not including fees, having had effectively their revenue halved. So if you think previously Bitcoin, when it was at 12K, the miners were actually making double the amount that they're currently making. So these miners, a lot of them have been washed out who potentially weren't very efficient. And, just over time, like the strongest, the best pools are going to succeed. And what you end up with is a load of miners who don't really want to sell their coins, making 10.8 million a day, when they know that there's effectively a bit of a shortage on the exchanges, or information would suggest that there's a bit of a supply issue on the exchanges. So, the miners effectively don't have any incentive to push the coins onto the exchange to sell them, particularly when we know we've got big demand things going on, like micro strategies coming into the market. So just naturally, the supply and demand game for me tends to imply that Bitcoin, should go up in price. Looking at the NVT signal.
Yeah, I just want to comment. Speaking of the Puel multiple, I actually had chatting with him the other day. I need to have him on the show. He's been doing some more work on-chain analytics as well. Should get him on the show and see what he's been up to. Yeah,
I think he's been looking at some mining stuff recently as well. So yeah, it'd be good to have him on and hear what he's up to. But yeah, this is a great one, because it sort of gives you that idea of how incentivized the miners are to sell relative to the money that they've made in the past. So they're not that incentivized at the minute. They want to squeeze the supply while they can, and particularly, as I say, if there's big transactions coming in, and you can see the order books are pretty stacked around 10K, why would the miners sell on exchange? They're going to be less incentivized to do so. NVT, doesn't really need too much introduction, but this effectively looks at the market cap of the asset and then divides it by the volume over time. So obviously, if there wasn't many transactions going on the market, but the market cap was quite high, that would suggest that the coin is overvalued for the effective network usage that's going on. That's the gist of it anyway. And we can see at the minute that the network is obviously, there's a lot of transactions going on, and its price is relatively low, close towards its low NVT signals. So this has just got a standard deviation over it. But yeah, so that's telling us that the network's also being used. So we know that we've got the 1 year hodl. People want to hold their coins, look like they're investing them. We know everybody's in profit pretty much. We know that the supply is coming off exchanges. We know the miners aren't really incentivized to sell. Inflation of the coins coming out halved, and also the networks being utilized quite well. So all of that was also true, back in 2016 when the chart looked exactly like this. So for me, as a technical analyst, and as someone who looks at the fundamentals as well, I think it would be difficult to argue that if you had to have a bet on what would happen next, that you might see a breakout and retry and retest highs, because we've done so much time back testing this range here that we know how that plays out, but we don't know enough about the range above, particularly when we know that there's big demand and supply stuff going on. So fundamentally, that's kind of my view as to where we are. I mean, I'm about to go into the detail a little bit more as to what I think is going to happen next, but I don't know, Tone, what's your thoughts?
Yeah. So here's a question for you. So looking at exactly what you have on the screen, I would say it's taken us maybe 1.5x to do exactly what we did back in the 2014 bear market, right? Like the current lines are about 40% longer.
Yeah. Sorry, my headphones just chimed in to tell me
I
that
mean,
it was
like
going on.
the current environment has taken maybe 6 more months, right? About 50% longer, 30-40% longer, something like that, right?
Let's just check that. Is it not almost exactly the same? So it's 149 weeks. 149 weeks.
Oh, so they're exactly the same.
They're exactly the same, yeah.
Oh, interesting. Okay, wow. How about that? I guess I was looking at it on a small screen. So as you can see, we spent about another 4 or 5 months between the green bar and the orange bar. If you push that orange bar up a little bit to cover the next peak,
which here?
No, the other two, like between the green and the orange, that like the amount of time Bitcoin spent between them from this point on.
Oh, to here.
Right. Well, to the next one, I kind of want to cover the next peak and the next pullback. And then we had a real breakout. Like the real breakout took place at like 1300. If you just pull that, if you just take your pointer down, that's the real breakout. And that's the one that was never even back tested. So it looks like, so if you move the time bar over, how much more time do we need till that breakout?
That would be in April of next year.
April of next year, but like time-wise, like how many bars approximately? So it's
another 25 weeks.
Another 25 bars, right? 25 more weeks. So I can see us spending the next 25 weeks in between the green and the orange, like oscillating between 12K and say 18K before the ultimate breakout. So that's another half year. So at least 6 more months before the breakout above 20K.
I certainly agree with that. I mean, that's kind of what it's difficult not to come up with that being your trading plan, to be honest, is, really try and hang on as we retest the previous highs and then rebuy whatever that's probably when you're going to get the 30% correction, isn't it? Maybe drag them in over the all-time high for the liquidity and then dump on it. So yeah, and I mean, but that's a 2x from here. It's nearly almost. It's quite attractive, and it does seem doable. I mean, I was having a conversation with someone yesterday about what's going to invoke the FOMO, and really the guys who have got all of their bids hoping for this gap to get filled at 9,600, below 10K. There's still a lot of bidders down there, and I think if they saw a big green weekly close above sort of 12.5K or something like that, I think that's going to drag those bids up, and we'll see quite a quick breakout. And that's my view of it anyway, because what else is supposed to happen here? We could completely retrace all of the way back to 6K. It's certainly possible, and given the economic global environment at the minute, you wouldn't rule it out. I think that this was a black swan event that wouldn't have happened. But I also think that this plus tokens thing was something that shouldn't have happened as well. So I think, as long as we don't see some major global pullback, then it's difficult to be bearish at this point, I think.
Yeah, no, I'm completely in agreement here.
Right, so I'll just move down the time frames again. Is there any questions, so, or we're good to move on?
We had a couple of audience questions. Maybe we can entertain those real quick. One of them is, do you think that Bitcoin will break 10,000 this November? I actually do it myself. I think it can break 12,000 this week, actually.
Yeah, I agree. I mean, that's kind of segueing into what I was going to look at now.
All right, let's do that. And then we have a question on like the Bitcoin, like GBTC and the Bitcoin ETF, but we can save that for a little bit later.
Okay, so I think there's, we've got a pretty similar. I posted this maybe sometime this time last week actually. Well, it was quite obvious to me that Bitcoin's obviously got this this is the daily chart, by the way. Bitcoin's kind of had this big triangle consolidation, and it had this sort of final grind against the diag, and then broke out of the consolidation, and then it went up to resistance, and then effectively it did the full, triangle size in one go almost. And then we found ourselves in a similar situation. We peaked out. There was a really, nice fake out here, exactly like this one. And then we did a head and shoulders top, and we just ultimately broke back down and retested actually the breakout, and then consolidated against the diagonal, same as here. And then we broke out really strong the other day. We came back and tested it, which is what we did here as well. And then we did ultimately break out thereafter. So a similar sized move out of this range, possibly taking out this liquidity that we'll have at these two stops here, you get a really fast move to the upside when that happens. So it's taken a little bit longer this time, a bit more volatile as well. But I think that if it does go, and this is the previous high, is the 2019 high is up here. I think it's also the 61.8% retracement of the 2018 bear market. So if we do get like a short squeeze coming off the back of these guys here, I think we'd see a really fast move up to about 13K, possibly as high as 13,500 or something like that, before we get a big strong pullback. So that's what the chart looks like to me at the moment. I'm very aware that we could, and I mean, I'm interested in still bidding down here. Right now, I'm certainly not providing financial advice, but I'm not saying to sort of all in long this at all. Just to be clear, in my positions, I have been leveraged long, and I am not currently leverage long beyond like a small amount of leverage. I need to see what happens next before I decide whether I want to be on this train to the upside, because one of my rules is that I just don't carry margin at resistance. I need to see what happens. So I mean, ideally, moving down the time frame, or actually I'll just stay here for a minute. If we just go down the time frame very briefly. Pens all over the place. It does look like if I just get rid of this. What I really would like to see for us to break out in the really short term is us effectively turn this level 11,800 into support, and it is trying to do that today. So it's very tempting, to say that this is the breakout here. It's got a lot of things behind it to back it up. There's quite big bidders on the books actually at the moment. If you have a look, actually they've been removed. So this is the trader platform. It shows the ratio between sellers and buyers, and when the ratio favors the buyers within a given percentage price point away from the current price. When you see that, you get a green or a red, basically, that tells you the depth of the market. What we're seeing is that there were some sellers here. They've effectively gone now, and clearly the books are weighted towards the bid as opposed to the ask side.
Oh man, I haven't looked at Trader in a while. I need to get Joe Saz on the show, man. It's been a while.
Yeah, it's really useful. I use like quite a few platforms, and they each have really nice features on them. I mean, one thing that's useful here is you can see the open interests going up as the price has been going up, and this is one of the things.
So much bullish support, Jesus. I mean,
yeah.
I was bullish. Like I woke up yesterday morning and I couldn't wait to have Willie on the show because we were both super bullish. I'm even more bullish today than I was yesterday.
Yeah, I know. It's a cause for concern, to be honest, because you know what it's like when everything's going really well. That's when you get.
No, but you know what? I spent like almost 2 years being like the only bear And I lost such a huge audience. Like I was a bear from January 2018, like early January 2018, all the way until March of this year. So I lost a lot of views, a lot of subscribers, because people just don't like to hear the truth. And I looked like an idiot in the first half of 2019 as we rallied from 3,000 to 19, but then we came back to 3,000. And people say I got lucky with that, crash in in March, back to 3.8K. But that's what made me a bull, because so many people got wiped out. It's unfortunate that some of my friends were big casualties in that wipeout, but that's what the market has to do in order to have free reign to go higher.
Yeah, right. I mean, also, as bad as it sounds, like it was an opportunity for some of the bigger players to really create that floor as well. So some of the guys obviously, unfortunately, got shook out via whatever means that occurred. But then also it allowed stronger hands to enter the party and hold it, for the next term as an investment. So, that wipeout really probably strengthened us overall.
Oh yeah, no, I completely agree, because it just moved Bitcoin into stronger hands, and to maybe less leveraged hands to have more patience with that Bitcoin. But just like in 2017, the other thing I didn't mention is in that run up in early 2017, people forget how dangerous it was to be buying Bitcoin at $1,500. Like it was, the ETF was shut down and people thought it was coming. The split was happening with Bcash. Bitmain announced that they were gonna support Bcash. It was the SegWit 2x thing with Garzik almost getting in a huge bug. There was just so much danger in investing in Bitcoin between 1,300 all the way into 3,000, and it never even back tested that area. Like it went to 3,000 and then it pulled back a little bit to 1,800 and then just flew to 5, pulled back to 3. So it was not a good time. So now I'm like potentially looking for a repeat. Being a bull in early 2017 was going against the general convention. So right now, if the government crackdown is intensified, people are going to be scared in Bitcoin, and that could be a repeat of the scared environment in early 2017. And Bitcoin just kept rising and rising and rising.
Right. I mean, you really have to go through one cycle to get thick skin, I find, in this game. Particularly that 2017 run, there was so much FUD. Really the Bitfinex hack really sort of kicked it off, I think, for me.
And the thing is, and it wasn't like fake FUD. It was legitimate. There was like FUD stands for fear, uncertainty, and doubt. And in the first half of 2017, it was completely legitimate. There was no fake news. This was real news that would scare everyone out of Bitcoin. There was no fake news there.
No, I mean, as an investor, if you think about it, if you get in, I mean, I was getting in around $600 or around that sort of time, around the Bitfinex hack and the halving. And as an investor, when you've seen the price sort of go all the way up to $1,300 and then China bans Bitcoin and it goes all the way down to $700. And then you see it go from $700 up to sort of $1,400 and there's an ETF and then there isn't. And then that retraces. And then it all breaks out, and then there's going to be a hard fork, and you don't know, like there's 2 Bitcoins. It was incredibly difficult to weather all of that stuff on the way up. So yeah, it's not plain sailing when Bitcoin does get going. But one of the bullish things, I guess, the point out of this is we had OKX get their coins effectively all held on the exchange last week, and the sort of week prior to that was BitMEX FUD. And Bitcoin just absorbed the FUD, just shook it off. And even in those bull runs, would have seen probably a 20% or a 30% pullback at a right sort of time for a BitMEX FUD of that sort of size. So I think that was a really good sign of strength when Bitcoin was consolidating around 11K.
That's correct. And that also goes to something we've been saying on this channel back when I used to do videos with Tyler Jenks. in that it's Bitcoin's time for a bull market has come. And no matter how negative the news, it won't matter. Just like when Bitcoin is in a bear market, which it was all throughout 2014 and almost all of 2015, and 2018 and almost all of, well, half of 2019, and no matter how good the news is, it is almost ignored. It's just a cycle. And right now we're in a bull cycle, and negative news will affect it for, like, I don't know, 24 to 48 hours, and then it's business as usual.
Right. And I guess the argument I would have is that, you know, if you look at all this stuff and you can't conclude that this is what Bitcoin being bullish would look like, then you're probably looking at the wrong stuff, or I don't know, you probably need to get a new get a new hobby, be my suggestion. I know that we're teeing ourselves up here massively for a big dump. So I am just like, you know, sort of wish there was a way to hedge that situation. But yeah, I guess the other one other thing I wanted to say about this platform anyway was the useful thing is on the order book changes. So if you look over the last hour, you can see it's quite interesting to see what's going on in the order book dynamically. So you can see people have pulled the bids here at 11,800 and moved them to 11,700. So perhaps some people think there's going to be a dump. It's just useful information.
I don't know. I don't see it. I know you're a little worried that, like, the last two times you've been on my show, Bitcoin is on the verge of breaking out, and then it takes like a 3-month hiatus. But like, I don't see anything in the charts that would make me concerned right now. Nothing. We're literally sitting here on a brand new 4-hour closing high with what, an hour to go, 20 minutes to go? What do we got here? An hour, 2 hours to go. So I don't see it, other than everyone and their mother being bullish Bitcoin right now, which does create a little bit of a one-sided market. But half the people are always bullish Bitcoin, just like half the people have been bullish gold for the last 50 years. So they don't count. Like, if you've never been a bear of Bitcoin, it doesn't as a you know, someone that does shows like us, or someone that does TA, and you've only been a bull, then I don't think your opinion is worth much. Like, you have to be a bear at some point.
Yeah, that's true. And you're certainly not a trader unless you're worried about the downside along the way. But yeah, I guess it's super bullish. And one of the interesting things is I don't think people are that bullish. You know, the evidence is in, you know, if you look at the funding rates, I mean, this is skew, and it shows effectively all of the perpetual swap funding across all the exchanges. You can see that it's been low. You know, it's negative on some exchanges at the minute. Kraken's negative.
I'm completely with you. Like I mean, outside of the perpetual moon boys on Twitter, and someone just asked in the comments, what do you think about the Bitcoin fear and greed in cycle or index? Where are we? I'd say we're right around 50%. Like, half the people are so discouraged from the 1.5 to 2 years that Bitcoin hasn't gone anywhere. A couple of people think that it's overvalued right now, and a lot of people are scared with what's happening, you know, with these crackdowns, that there is absolutely no greed right now. Well, like, people are actually a little fearful of buying into Bitcoin, waiting for pullbacks. And I can tell you, for the last 3 months, every pullback has come short of where I thought it can go to. So we've been very bullish for a while.
Yeah, I agree. Again, the evidence suggests. I don't personally think, you know, Twitter is full of people who are overly bullish at all. I think it's relatively quiet. I actually think it was so quiet on the move that we had from 11.5 the other day that I think that it actually looks, a lot of them may well have been surprised by it, because there really wasn't that sort of fanfare. Oh yeah, you know, Bitcoin, it's going to hit 12K. It really just wasn't there. It didn't feel like it. So, and the funding suggests that that's the case. So overall, that's what you want to see, is the breakout that people don't believe is going to happen. You know, it's a disbelief breakout. And that's how ultimately you get the blow off top with the FOMO, when they all have to capitulate and buy at the end. And that's where I hopefully am going to be selling. So yeah, it's a very interesting chart, to say the least. My indicator is bullish again as well, which is obviously a good thing because I use that a lot. If I just go down, yeah, so this indicator, so a couple of other indicators I've got here is this green one is effectively just it looks at the price on the perpetual swap contracts versus the price on spot exchange on Coinbase. And whenever that effectively is negative, i.e. the spot exchanges are leading the swap exchanges, the derivatives, you can see that Bitcoin does really well through consolidation periods, where the spot demand really ramps up. That's where Bitcoin does really well. We had it through all of this phase down here as well.
Looks really good right now.
Yeah, and over here it's all, it was all red through this, what was probably really just the hype move off the back of the halving. Again, green back in this 6K range, red up here, green down there. It's pretty reliable, this thing. And it's just saying
it's been green all the way up. Wow, look at that.
Yeah. So ever since we topped out, this is something to look for, is like consecutive derivatives leading spot when you've had a pump. That tends to be bad news, and we're just not seeing that now. It's clearly spot that's driving the price up. I mean, you can actually see it in the books because I was watching in a lot of detail the order flow over the weekend, and a lot of people shorted the bottom, which created a big short squeeze, and people just kept on trying to sell down the derivatives, but the spot exchanges were just leading the price all like up entirely, which implies that there's a disconnect between the underlying demand for spot in the market and what people who are effectively speculating on the market think the value of the asset's worth, and that's what leads to a short squeeze. So yeah, I mean, OBV. This is a consolidated OBV, so it's taken into account the exchange volume on all of the exchanges, which I think matter at spot. And that's pushing a higher high. It's already breaking out above the highs over here. And to me, that people who follow me, they know that I use that as a breakout signal, and it's already broken out as well. So we've still got some resistance to get through here, but if you wanted to have the fundamentals to back it up, and you wanted to see multiple time frames telling you that things look bullish, it's bullish from everything from the hourly to the monthly. So I'm literally coming on saying every time frame is bullish here.
Yeah, that's what I've been saying the last the last couple of days, actually.
Yeah, I guess, like, I don't know, is there any questions at that point? Probably just sound like every chart I'm just like, yes, this is a new chart, it's bullish. Next chart, bullish.
Let's make sure you got a few more charts, but let's just remember, I want to cover, we covered this with Willie a little bit yesterday, Bitcoin's correlation to both the S&P 500 and the shitcoins. There was also a comment that the ICOs of 2017 helped the big rise in Bitcoin. We covered this with Willie a little bit as well. Do you think Bitcoin will decouple from the S&P, from the shitcoins? Do you think the DeFi movement of random printing of useless tokens and staking insanity for yield, do you think, what kind of an effect do you think that will have in the next bull cycle? So questions like that, but we can save those for the end.
Yeah, I mean, well, I do have actually up the S&P 500 and Bitcoin. I was going to mention the correlation. This chart, obviously, at the bottom here is the S&P 500. We had this sell-off, bit of a consolidation, a run-up, and a sell-off.
Right. So we actually decoupled over the last 24 to 48 hours, but on a big scale. And I kind of said it in a chat earlier. Let's see if you agree. I think that Bitcoin, and I've been saying this actually for like 6 months or something, that Bitcoin is correlated with the S&P 500, but Bitcoin is not going to new lows. And I don't think the S&P 500 will either at this point, but it will slowly decorrelate, but it's still somewhat correlated. So if you really want to break 12,000 this week, you need the S&P 500 to pop. Now, if the S&P 500 doesn't pop and the S&P 500 kind of keeps pulling back, Bitcoin can still break 12,000, but it's not as guaranteed, because if the S&P 500 has a huge update tomorrow, overtaking the last 3 days of losses, Bitcoin is up at 12 and a half, maybe higher. So I think at this point, a drop in the S&P just holds Bitcoin back. A rise in the S&P pops Bitcoin up.
Yeah, I totally agree with that analysis, actually. I mean, it's to claim that they're not correlated in any way whatsoever is just wrong, because both of them have gone up over the last 10 years, right? So to some extent, they're correlated. We know that when more money's printed, which effectively helps the side of the value, or the nominal value of the S&P 500, if that happens, it also impacts Bitcoin anyway. And stimulus, we know, also has been helping the prices of these assets as well. And there should be more of that to come. I mean, an interesting question is around, what's the election going to do to the price of Bitcoin? And for me, I think that Trump's probably going to try and do whatever he can to get this pump out of the S&P 500 in due course. And we know that he's going to deliver stimulus if he gets back in. If Biden wins, well, they're going to want to deliver stimulus as well. So the narrative would be that the stock market's probably going to either go sideways or go up. And either of those situations, I think, is positive for Bitcoin. As you say, if there's a big sell-off for whatever reason, we may retrace a bit on Bitcoin, but I don't think it's going to fundamentally change alter the course of where it's going. I mean, we just saw yesterday, it's only disconnected for 1 day. It's literally done the opposite, actually, to what the S&P 500 did. It's only 1 day. I mean, the thing that's really been the correlation factor for me is like what's been going on with the dollar. And you can see that they are still inversely correlated, the two. For some reason, yesterday, the dollar sold off and Bitcoin went up. That's the correlation we've seen previously. But the dollar sold off, and also gold and silver, the gold and the S&P 500 didn't do very well either. And we haven't seen that before so much. So I would say that actually the Bitcoin's behaving almost similarly to how it has been, whereas the S&P 500 and gold are sort of behaving slightly differently to how the dollar's been behaving. That's my observation anyway.
I'm waiting for gold to break out. I'm pretty bullish gold right here too.
Yeah, I bought the 20-week moving average on gold. I've been following that for a long time now, and I've waited, once it crossed 2K, sort of 18. I think I got in at like 1867 or something like that. And that's a long-term hold for me. I don't see, if it goes lower, I'll just buy more. I have no reason to believe gold's not going to, there's very little downside risk in the gold market. I can see it going to 5K personally is my, top of the next cycle for gold would be about 5K in my opinion. I just sound like I'm really, really bullish on everything. And I genuinely am bearish a lot of the time as well. But yeah, so yeah, that's the correlation stuff there. I mean, Bitcoin is, it's broken out, found support from where it was rejected. This is what it's meant to do, when it's doing these crazy moves to the upside. So I don't know. We may well come back and retest this 11,500 level. I'm very cautious about that.
Well, speaking of retest, we do have a good question. So I'll probably put you on the spot now before I forget. What do you think is more likely, a pullback to 11 or a pop to 14?
Well, if you want my honest opinion, I'm trading right now as though either of those situations are probably equally likely to just occur. So I'm like long at spot with a little bit of leverage. The reason why is because we're at resistance. I'd quite like to buy lower, but I also know that we may break out. So I'm actually of the view that they're equally likely. Both of those situations are equally likely to occur. But if we do retrace, I would see that as something that would be bought up quite quickly. Whereas if we break out, that's something I expect for continuation. So even if we do come back, I'm expecting continuation at the upside at this point.
All right, let me ask you one more question then. In your scenario of gold going to 5,000, where do you see silver?
Right, so I've already done the maths on this one. So I was joking on that, I'd get a tattoo to tell me to sell silver at $125. That's where I think silver would go to, because as I've said this before, people who invest in precious metals, they don't really have an exit strategy. with what they're doing on their investments. And if you get involved in precious metals to any extent, I think that it's a good idea to know when you're getting rid of the stuff and what you're going to do with the other stuff when you've got rid of it, because otherwise you're just like, you're buried like a pharaoh with all of your gold, or you'll like keep it your entire life, store all this value, give it to someone, they'll sell it and spend it on a car and enjoy the car. Do you know what I mean? So to me, there's no point in like holding on to this stuff forever and ever. But if you look at the gold to silver ratio, I'll see if I've got a chart already.
Right, it hit a recent all-time high at 120, and I think it's going to 200. So at some point in the next cycle, I see a 200 point ratio between gold and silver. I don't know. I doubt it would happen at the top, because a $5,000 gold is only a $25 silver. Like the current price of silver with the $5,000 gold creates a 200 to 1 gold to silver ratio. But I think that is where it's headed eventually. Could be on the way down though.
I mean, if gold comes down, if gold goes to 5K and the ratio is 40, then I think that's how I get to my $125 silver. I think that's how. Is that right?
Okay, so you do see the silver gold ratio going all the way back to 40, because I don't. I think the low for the gold ratio was in.
Do you?
Yeah.
I don't know.
Yeah.
I'm not an expert in the silver market by any stretch. I know very little about fundamentally what's driving it. So I couldn't really comment if there's any scope for it to go lower, the ratio. I mean, if you don't think that it's going to go lower, then you should be long in the gold market and short in the silver market as a nice hedge play. Well, that's how I would do it. I'm waiting a little bit of time to do that, to long gold, short silver. I do think it might come down to 50. It seems to do that historically, but we've only got a short amount of data here, really. I mean, it goes back to 70s.
Yeah.
But
the data before that is useless, because gold was fixed prior to 71, so you didn't have a floating exchange rate of gold anyway.
Yeah, I mean, it's a bit like, I don't know. Anybody who's got silver really wants to have gold, don't they? Really, I don't know really why you'd want silver. It's just the poor man's version of gold, really.
I still have a bunch of silver. I never got around to converting it back into gold, but you realize real quick that storing your silver is a royal pain in the ass, because it's so heavy. It's takes up so much size. Like 1 ounce of gold is like 20-30 ounces of silver. Like, it just makes no sense at all. And the amount of premium you pay on each silver coin to buy it is like 10 to 15%, versus a single gold coin, your premium is maybe 5 at most. So it just makes no economic sense whatsoever. It really is the shit coin. Like a shit coin to Bitcoin is what silver to gold is on every level. But I didn't really fully understand that until reading Saifedean's book, which helped me a lot to understand that part.
Absolutely. I mean, what in the UK? I mean, the UK is just it's a terrible place at the minute for regulation. It's coming at us from all angles. But in the UK, if you want to go and buy some silver from a broker and it's new, minted or something, there's a 20% value added tax on top of it as well. So it's a really bad thing to do, is to rush out and go and buy some silver coins in the UK. I don't know. I very much doubt.
No, it's about the same everywhere. Like, I remember paying $2 premium for my silver coins that were, I don't know, at most $20. So we're talking 10%, and that was from someone that I knew. I remember him raising it to $3 premium on a $20 coin, which now makes it 15% premium. And it's just, buying in, it's almost buying in bulk. So when the same person was selling gold coins, they were like, I don't know, $1,200-$1,300, and those were going for $50 and $60 premium. So that's less than 5%, something like that on premium. But if you were buying 1/10 of an ounce, he would charge you like a $10 premium on that. So it's like you're overpaying. You're paying double the commission on 1/10 of an ounce of gold versus a full ounce of gold. So it just makes no sense to buy anything other than straight up 1 ounce gold coins. It's It's not expensive enough. If you're looking to invest in physical gold and you don't have $2,000, you really should be doing other things with your money.
Yeah, right. Exactly. I mean, if you've only got $200 as your last $2,000 and you invest it in gold, you're a bit of a fool, to be honest. It's not the best place to put your money, I don't think. But yeah, I guess another interesting, just while we're on it, just anecdotally, the in the UK, I don't know if it's the same in the US, but there's no tax, there's no VAT on gold. It's only on silver because
Oh wow, that's a huge favor to
yeah,
gold.
man.
Oh, and someone in the comments says gold and silver and gold have actual uses unlike Bitcoin. And the answer to that is, well, that's what makes them shittier money. The fact that gold and silver, especially silver, have actual good industrial uses is what makes them significantly shittier money than Bitcoin. Like you don't want Bitcoin to have additional uses other than money. It actually holds it back. This is what Ethereum people still haven't figured out.
Yeah, I'd agree with that. I mean, personally, I don't think investing much of your assets into gold is a very good idea. And really, you should only really be doing it if you've got a decent amount of assets anyway. So, because it's because of the cost per ounce. So, I don't know. It's an interesting topic, but gold and for most people, they should be investing in something that's going to yield them a return, like dividend yield or something like that over time. I think would probably be a better place for your $2,000 than into one gold coin, which is quite amusing. But yeah, so it's an interesting chart. I can't trade it because it's in the middle of this range now. But if it gets down to 50, it's probably a good long-term hedge play. So yeah, that's I don't know, that's gold and silver, isn't it? Really. One other thing I like to look at is what's going on with oil, because I've found that it leads the market somewhat, and it looks pretty bullish at the minute.
I'm really surprised that oil is this expensive in this world of a 1 year long global shutdown. Like I am surprised.
Yeah, I mean, you've got a load of people who dictate the price, don't you? So that does help. But yeah, it's unusual. I mean, overall though, what's been really hit by this stuff? There's been a slowdown in manufacturing and obviously airlines as well. I guess that's where the big hit is for the oil industry. But fundamentally, there's still a lot of trade going on. So I don't know. I mean, oil hasn't really recovered anywhere near like everything else has. Back in January, oil was up at 63. It's at 40 now, so it's lost a third. Whereas like the S&P and everything's way higher, gold, Bitcoin, everything. So relatively speaking, it hasn't done that well. I agree that I think that one good thing to point out is it really did lead the way when the S&P 500 came crashing down. So if we see oil start to put in new lows, I would be a bit concerned at that point that we might get a bigger sell-off in the S&P 500. But while it stays where it is, it kind of gives me the idea that traders are relatively happy in the market, that there's enough underlying demand to keep the whole machine alive for a little bit longer. So yeah, oil's an interesting one. I suggest keeping an eye on that. But yeah, I mean, that's it really. I was going to say that the NASDAQ, interestingly, it had this big inverse head and shoulders on the 4 hour, which has played out since, we tagged that new all-time high. We've come back and retested that breakout. So I think a lot of people are getting super bearish on this stuff. And yeah, it is a lower high, but all it's really doing is retesting the breakout of this pretty nice consolidation that it had here. So again, a little bit of cause for concern. We did see that sell-off, but all it's done is come back to support.
I really like this pullback here. I don't really see the NASDAQ going much lower, but with the election, this is where I advise people to just take a break and not trade, because anything can freaking happen.
Yeah, election nights are pretty good fun to trade, though, I must say.
I mean, if that is your specialty, that's the thing. Yeah. If your specialty is trading clean TA on swing charts and not high volatility, then you should not be trading around election day. But if you're, it depends on what your trading specialty is.
Right, and yeah, it's certainly a time if you're not that great a trader to definitely not be using much leverage, because you will get hammered if you're wrong, and it can swing quite easily 5% in a night.
Hey man, we just made a new Bitcoin swing high. We were a few bucks away from 12,000. We hit 11,954 on
Awesome.
stamp.
Don't think I've got any sells there. That was where I thought we could potentially top out for a little bit. When we previously, started getting up towards the fake out level, Bitcoin struggled to get past that. So an equivocal value there would be about 12,200. So I did think that might be where we get to, and then we see maybe a bit of a sell-off. But if this is like a really good time if you're interested in trading, to look at the lower time frames like the 5-minute charts, because when Bitcoin's moving fast, you need to be able to get into the market and try and work out what's going on, and it can be really difficult. You can almost be paralyzed at times, but if you remember, all we were doing before when we came on here was drew a line across the top.
I love that trade. I love the breakout. I mean, the pullback went a little further than I wanted. Like would have been nice to just go from that top down into that support zone. But that line that you drew, I draw that line all the time. It's one of the first things I teach after candlesticks in the workshops.
Exactly. And, you can see that, we've had a breakout. Okay, it failed, but it came back, it reclaimed it. That's a sign of strength by the bulls. If you look here, we broke out, we lost it, we came back, we reclaimed it. We broke out, we came back, retested it again, we broke out. I mean, this shows that the market's got momentum right now. I mean, it could obviously change, but I look at order flow as well. I'm not going to go into that here because it's quite intense, but the order flow stuff just showed you that the market buys were just getting marched all the way up here, and also people were trying to sell, but you could see that each pop they were just getting liquidated. So people are trying to sell, putting tight stops against each of these highs, and then you get a run up into the ask walls up here, and that process will just continue until you break all those ask walls, and then you rip to 13, 14k. But I don't think we're quite there yet. I think we've got a little bit to do. Certainly 12,200 I think would be where we'd see a bit of a pullback if we do get that high. I mean, we could pull back here. We've covered quite a bit of ground, but yeah.
Well, that's the thing, right? If it goes high enough, if we go to 12.5, that pullback should only be down to 12. Like, I don't even think it's gonna get into the 11s after that. And someone keeps asking, but I thought I already asked the question, your likelihood of Bitcoin pulling back to 10, 11K area. And I phrased the question of what's more likely, 14K or 11K, and you're 50-50 on those. So waiting for 10 to 11K before buying in could really get some people into trouble, and then they're FOMOing in at 14K at the worst possible time at a double top for a pullback to 12.
Yeah, I mean, thanks for the question, but this is a typical question that I get asked a lot, which is, I have some money I need to invest. I don't know when to do it. And at the time, Bitcoin's breaking out, and obviously we can't give advice to people, and you really have to sort of draw your own conclusions. And I do mean that in the sincerest possible way, because your situation might be that you're looking to borrow some money and try and put it in the market, or there's no idea as to what your risk profile is, and people should really take that into consideration when they're looking at anybody's analysis. But what we know is that we consolidated in this range for a long period of time here. And we're now breaking out of it. So I think the key level's 11,500. If we bounce off 11,500 and find support, I don't know if we'll go back to 10K for a long time. I'd say there's a much higher probability we continue.
I don't like I've been saying for the last few months, if this year will be the last time we have a shot at under 10K. I don't see us going below 10K next year unless we enter next year under 10K. So if we're entering next year at 12 or 13, I don't see below 12K, below 10K possibly ever.
Yeah, I mean, obviously we don't. I'd never say never. You know, it's difficult to be super bullish.
So here, let me rephrase that then. Unless we enter next year at under 10K, I feel that there is a less than 50% probability that we will ever see below 10K again if we're entering next year at 12 or above.
I absolutely agree with that. But you know, you never know with a big drawdown on liquidity or something like that.
Look, anything can happen, but we are talking in probabilities. And entering January 1st, for me, 12,000 or above drops the probability of going under 10K for more than one day to like 20%.
I would tend to agree with that as well. I mean, overall, well, I would say that the real money shot is when you hit the all-time high. Imagine how quickly bought up 10K is going to get bought up like nothing. If that was to get back there. So the strength of that, all of this time we've spent below 10K would certainly give me the idea that, certainly less than 20% is where you want to be thinking, definitely.
All right, let me throw one more concept out there because people always ask when to buy. So, and here's something I don't usually say. I can tell you when I am not buying. And I am not buying this year if the price is in the 13.5 to 14.5 area. To me, that is the mother of all resistance. So that's the area I am not gonna buy. Like I would buy here, but I would not buy in the 13.5 to 14.5 vicinity. And the first time, so this is the other really important part. I would not buy it there on the first crack at 14,000. But the second, and especially the third, become amazing buying opportunities for me for the next breakout. And then the whole thing repeats itself in 6 to 9 months when we're pushing 20K.
Yeah, and that is, I think a lot of people are thinking that that's what is most likely to happen. And there is a little bit of concern with that. But as I say, if you see a big green candle breaking out above 12.5K, you already want to be in position for that.
Right, but I don't even mind buying that, but I am not going to buy at that yellow line. No. The next one, up. No, up.
This one.
Yeah.
Oh, it's 20,
I am not buying. Oh, no, sorry, that's the 20K, my bad.
That's 20,
you don't have one right at 14K, but a line right at 14K, I am not buying that line on this push. So if we get to 14K this year, that's where I am not buying. Either I am in before that or I am waiting for a pullback.
Yeah, I'd agree with that as well. I mean, 14K is the 61.8% retracement.
Right. The vicinity of that line, the vicinity of 14,000, I am not buying there this year. Now, if it gets there again, this year, and then it gets there again in, say, March, I'm happy to buy it in March. But I am not, if we go straight up to 14K, that's where I am not buying. That's where I'd rather sell. And the same thing happens at 20K.
Yeah, I guess the only watch out is that we may just see FOMO that we're not taking into account.
That's why you should be in before you get there, and then you have a lot more options. But if you're waiting for a pullback and the time for you and you decide to FOMO in at 14K, I think that's a terrible plan.
Yeah, I'd agree. I mean, fundamentally speaking, if Bitcoin can, if I was going to be looking for an entry, really, like 11,700, so the closest weekly, where we had that big weekly candle close. Yeah, if we can close above there.
Yeah, the breakout of 11.5. I mean, I talked about that. That was my weekly. The breakout of 11K a few weeks ago was a buying opportunity, and daily the breakout of 11.5. Now you're on the edge. If you haven't gotten in yet in this move, you have very little time before it starts to get a little overheated. But you still have, I think, about a week of time and about $2,000 in price. So whichever comes first, either another week or $2,000. Now, if the $2,000 comes tomorrow, there's no week. But if it's a slow move up from here, then you have a couple of weeks to maybe push it higher.
Exactly.
On a weekly scale, you still have more time, but there will be a pullback. Like I can see a pullback from 12.5 down to 11.5. But if you're waiting for below 11, you could be once again disappointed for like the 8th time in the last 6 months.
Right. I mean, if you think that this is the question is a trade in itself, like of opportunity cost, which is basically what you've just described, whereby, you have to think, well, okay, it's 12K now. Is it going to break out? Well, I could wait for $500 pullback. Okay, so that's going to give me a risk of $500. But if it breaks out, it might go to 13K and I can't come back. So that's a 2-to-1, risk reward on your trade within itself. So when I find myself in those sorts of situations, I actually just try to zoom in on the chart and trade like the 4-hour or something like that. If I'm looking at the weekly candles, I'll try to get an entry on the 4-hour chart, which is kind of how I'd recommend that people would approach it, is look at the 4-hour chart over the course of that week if you're worried about a breakout. If it looks bearish, then you've maybe got a little bit more time. But, if you're really sat here waiting for 10K or you're waiting for this CME gap, like good luck to you buying at 15K is sort of what I would say to those guys, is like they've probably missed the boat a little bit. But you never know. This is trading. Anything can happen. So, bullish overall. All
right, let's close out on, we haven't talked about shitcoins at all. So what's your view on it? I know Bcash is about to go through another hard fork. That thing won't die. It's still like in the top 6 or 7. You have BSV almost in the top 10, but not that things like Chainlink or Polkadots are any more useful than BSV or anything like that. Like, what is your view? Is Bitcoin finally going to break away from this nonsense, or is it about to rise at a faster percent because people feel that Bitcoin is too expensive and it's unit bias, like the Ripple nightmare that's still with us?
I think where we are currently in the cycle, and this is something I've talked about extensively, with my my partner Philip Swift, is that it feels like the real demand for crypto, the thing that's really going to push it to the next level, is actually coming from the institutions who want to have exposure on the balance sheet. The people who are buying $500 million positions in Bitcoin. That's, to me, suggests, well, certainly I don't see that for Ethereum. There's nobody buying Ethereum to put on the balance sheets, as far as we're aware. I mean, maybe they do, actually. That might not be 100% true, but
sounds like the SEC and the CFTC want to buy it for their balance sheets because they're so clueless on what it does from their recent speeches.
Yeah, I mean, but overall, like the big money's flowing into Bitcoin at the minute. One of the final things I was going to mention actually was the dominance for Bitcoin has broken out. So we've been having a look at this for a while, and there's been like a head and shoulders bottom on dominance. This stuff really, I don't know, is it tradable? Maybe. But there was a head and shoulders bottom and it's broke out. It did look like Bitcoin was going to have a bit of a run. And actually, a lot of the alts have been down today. And that is a little bit of a red flag to me. I don't like it when a lot of the Bitcoin value has been presumably has been drawn away from alts, because the market's obviously not expanding. Actually, if you look at the total market cap, the total cap's only up like 0.7, well, call it's flat. It's pretty much flat. It's at 0.18%, whereas Bitcoin's up 1.5%. So the money is almost flown out of alts into Bitcoin, you could argue, for us to equal flat. And I don't like that. when I want Bitcoin to be bullish, I actually want to see money going in across the whole sector, because it gives more of an idea that there's new entrants into the market. I'm always a little bit wary when there could be a left pocket, right pocket transaction within crypto. Is there evidence for that? Like beyond this, then not that I have, but all of the pairs are down versus Bitcoin today. And I do think that will continue. If we do have a big breakout and Bitcoin starts really pumping, we might see some relative loss in the alts. I wouldn't have expected the cap of the alts to decrease overall against the dollar. I wasn't expecting that, certainly not today. We might see a catch up maybe with that. But yeah, in the future, do I think it's the end for the alts? No, the alts aren't going to be going away. They're going to be remaining. I think they'll take a tailwind off Bitcoin, but Bitcoin's going to be effectively grabbing the headlines like it was last time, perhaps until the end of the cycle when a few of the alts might have done really well. I still like DeFi. It's still just like, I think last time when I came on, the phrase I used was, it was like musical chairs. Eventually the music's going to stop and you're going to be left.
On a Titanic.
Yeah. It's like shuffling deck chairs on the Titanic, really trying to make money for some people. But yeah, the Titanic did effectively sink. Saw some of those big coins like Wi-Fi really sell off. That was one of the sort of golden ones, was this Yen Finance. And that attributed, effectively went from 4K on exchange to 40K. So it did a 10X. It's back at 13 now. And it doesn't look particularly healthy. It doesn't look bad, actually. There's an argument for it potentially bottoming here. But, I'd suggest that it looks more bearish than bullish, really. You'd be speculating to say it's bullish at the moment. And so, you could see those, I think, draw down. Phil Swift was saying he thought another 30% versus Bitcoin downside for some of the alts could be on the cards. And I tend to agree, overall, I think, my view is that I understand what Bitcoin's value proposition is. I think it almost has a clear place in the market for what its purpose is now, as effectively a hard asset. People understand what that is. So I still don't think people really understand what this stuff is and whether it's legal or not. It's quite easy to understand Bitcoin. You buy it, you have a number, and that number is how much Bitcoin you've got. Whereas all of these other ones are trying to talk about, they do this, or it gives this much return and this much staking and that, it's quite niche market stuff to understand all that. So in terms of attracting investors, I think the front door is always going to be Bitcoin. And when the front doors, guys are coming in with big suitcases full of money, that's going to be Bitcoin at the moment. And it's not going to be for some sort of dodgy coin called hot dog or something like that.
And man, can you open your trader chart with the order book? Guys, by the way, I do have this in my affiliate section, and put it on like 5 or a 10-minute chart. I think we're about to break out, man. Again, one more shot at it. One more shot at 12K. Like I'm almost like keeping you on here just so we can. Oh, there it is, new high, new swing high right now. Boom. I almost want to keep the stream going until we break 12K because I think it's possible to happen like in the next 10 minutes.
Yeah, it's doing what you expect. It looks like the start of a parabola. I don't know, I can't say it, man, but where you just, as I say, like you just see these support and resistance continually getting taken, and that's how you sort of get that escalation.
Like it did have to go a long way from this morning, so we did move from say 11,730, and now we just hit 11,960. That's a big move in a matter of hours. So it may be running out of steam, but that order book isn't slowing down, man. That order book is legit.
I've got something interesting here. I wasn't going to share this stuff at all, actually, but I will while I'm here. So this chart is effectively looking at order flow. I won't go into too much detail about how it works. effectively the blue boxes are where you can see that there's been more market buyers than sellers, and the red boxes is where there's an imbalance the other way. And what we can see effectively on this particular candle is there's been a large amount of sellers come in. So you have the delta, which is the difference between the buyers and the sellers. But a lot of sellers come in, and that's why you can see the delta, effectively the difference between the buyers and sellers, has gone negative. But if this candle was resolving bullish before, on the hourly, so it had a big bullish divergence where effectively when you see a candle where there's a lot of market selling going on, but the price is going up, that's a really bullish sign. This is how I tend to look at these things. I mean, open interest.
We just pulled back. We just pulled back like $30 right here because we did make a new high though. New high took place on the current 10-minute candle.
The problem is open interest here is declining. And an open interest going down when you're going up is bearish, because there's not new participants coming into the market. So it kind of suggests to me that it could be a bit of a short squeeze. Well, you can see it's a little bit of a short squeeze, but yeah, it could run out of steam. By the same token, 12,200 is sort of what I was saying, is where I think it might finish up for the day. But yeah, it's good. This is what we've been waiting for a long time, where we feel comfortable that it's bullish, not that there's been some stupid scam going on that you found out about, or I don't know, just some halving pump when you know that there's going to be a rug pull. Like, it feels a little bit more organic this time in the market. So yeah, hopefully we'll continue as we are.
All right. Hey man, I want to steal screen share from you. Back to me. Just want to point out that last screen share that we looked at with Phil was the platform Trader. I need to have Joe Saz on the show to talk more about it. He helped design some of that stuff. And if you're interested in that platform, here is an affiliate code on my affiliate page, along with a bunch of others. Let's wrap this up. I want to take a look at my charts real quick. We started with my charts. We're going to end with my charts. It's been an hour and a half, so we are going to let Phil go after this. There was that GBTC question that says, when a Bitcoin ETF eventually comes, will that hurt the price of GBTC? Yeah, absolutely. It'll destroy the GBTC premium that today is at 16%, which actually is not that bad. 16% is in a reasonable range. I personally like it under 10%, like it was going into the month. Now it's at 15. As long as it's under 25%, I think it's reasonable. 25% is usually the top of the range. Ideally, you want to get in when the GBTC premium is under 20. Okay, real quick. Here's my weekly chart. I am very bullish on the weekly scale. I think there's a high probability that we will have a brand new high weekly close, which means we have to close above $12,080. Oh, no, sorry, that was a high. We're already at a new high weekly close, so all we got to do is close in this vicinity, and we are all set on the new weekly high close. Here's the daily chart. The daily chart is on a breakout as well. I think the daily chart has room to potentially as high as 14, but more likely to just 12.5 sometime over the next 4 to 5 days. Very bullish daily chart. That's the 10-minute chart. We did just make a new high. We've then since pulled back. And normally we're looking at the 4-hour chart. We are looking at a brand new high on a 4-hour scale in an hour and a half from now if the price holds. On the hourly scale, we just made a new swing high. So I am bullish across all time frames right now. Doesn't mean that things can't change, but it's mostly the weekly and the daily with a significant amount of room to the upside. A quick peek at gold. We're still holding this potential breakout. I am still pretty bullish gold, and Phil agrees with me on that. S&P 500, I think it's very likely that the slide is over and going into the actual election day. I think we're just going to hover here. I don't think it's going to break down big or go up big. There could be a lot of volatility, but I think that people are just too busy watching what's going to happen with the election, and traders might actually sit this one out. I can see the volatility dropping going into this election day, instead of rising like it normally does. And here's the weekly S&P. It still looks good. I'm still not too concerned here unless we get another bad weekly candle. That's pretty much it for me. And I mentioned it yesterday with Willie Wu on the show. The financial summit was moved to next November. Hopefully we can get Phil out there as well to hang out with us in Bali a year from now. All right. I'm going to cut the screen share. And Phil, any closing words?
Yeah, just thanks for having me on. And yeah, looking forward to us hopefully finally breaking 12K. Looking for that support at 11,500 if we do get a pullback. And then, yeah, hopefully we can just sit tight and enjoy the show going into the early 2021.
All right, cool. Hey guys, thank you so much for watching. And we haven't done a news show in a while with Jimmy, so we'll try to bring that show to you next time. And thank you again for the support. We had pretty much almost 1,000 viewers in the second half of the show. So please like, please subscribe, and see you all on the next one. Some of you barely remember the time where I was a big bull throughout my podcasts. So let's see how this year goes. Maybe I can get some of those subscribers back and finally break the 100K barrier. All right, guys, talk to you all on the next one.